Welcome. Can the possibility of a rate hike be taken off the table?
It can't, and that's one of the clear messages from the minutes, and of course Michelle Bullock's speeches in recent times, is that we really don't know what's going to happen next with our economy, indeed the world economy. The worst of the slowdown in consumer spending may well be behind us, and we have some tax cuts to give household incomes a boost from 1 July. And of course we're starting to see evidence in early 2024 that the business community is actually looking a little bit brighter. So it can't be ruled out. I don't think the RBA would undertake further rate hikes without a serious and considered need for it. But I think that's the weakness in the market view, where all the discussion is around the timing of rate cuts, not whether or not there is the chance of further rate hikes.
It's been revealed today that house prices have risen for the 14th month in a row. Does this give rise to concerns about the wealth effect?
Well, I think the wealth effect is a clear transmission from higher house prices into the economy. And of course that'll play into, I think one of the key uncertainties is that household disposable incomes are going to start to grow again this year after 18 months of quite significant downward pressure from a rising tax burden and higher interest costs on mortgages and so forth. But with these tax cuts coming and no rate hikes in recent months, we are going to see a bit more scope for households to loosen the belts after a period of sustained softening and slowdown. So I think the house price story very much plays into a big part of the community who will benefit from more wealth. But of course there's also the channel which shows that there is an excess demand for housing, that people are willing to pay up for housing, and that's inflationary. That's an inflationary environment which, although the RBA might not explicitly draw that link, there is certainly these links in through higher rental costs and of course ultimately CPI down the track.
And so in terms of the setting of monetary policy, how key is the unemployment rate from here?
It's actually really tricky in this cycle to be too prescriptive around full employment. So I'll give you a couple of reasons why. One is, of course, that we've had this huge surge in population, many of which are working age, and even if employment is stable, that's going to put upward pressure on the unemployment rate. So that's not a normal cyclical situation, and I think the fact that the unemployment rate fell below 4 last month is quite a surprise and reflective of actually quite a strong demand for labour. And then there's the other point which is much less discussed, and that is we're going to see a massive churn in jobs in this economy as all these vacancies that are out there in things like aged care and health and defence need to be filled by people who are probably going to lose jobs in fading or declining industries. And so we're going to have to see people move from one job to another, be re-skilled, and that'll cause a bit of temporary unemployment. So I think the unemployment rate as an indicator of the stance of monetary policy is not going to be a good one in the next year or two. And of course it's likely to rise even in the presence of what could be an otherwise pretty strong economy.
If the RBA is to raise rates again this cycle, when is it most likely to, and would it only hike once more?
Yeah, so look, the timing of any likely further and probably final rate hikes, I think is in the second half of this year. The RBA are absolutely at their limit of tolerance on inflation, both in terms of the amount of inflation there is and the timeline to get it back to their target. So if this economy starts to show further evidence of recovery and this domestic component of inflation remains sticky at above 4% or worse still starts to rise again, then they will move in response to that. But it's probably a late winter or spring sort of timeline. I think they will only do it if they absolutely have to. I don't think they'll just do one, not unless their timing is such that suddenly everything turns around. I think there'll be a couple. They probably won't do more than that and watch and see what that does to the economy. But given our interest rates are about a percentage point below where they are in the rest of the world, it's just a scenario that cannot be ruled out, and I continue to be quite amazed at how many domestic economists can rule it out.
Warren Hogan, thank you.
Thanks for having me on the show.